Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Urenergy Inc. quarterly report. Urenergy Inc. provides a range of services related to uranium exploration and operation. These include acquisition of uranium mineral properties, exploration of uranium, deposits, development of uranium mines, operation of uranium mines, management of uranium projects. The company's flagship service is the operation of its Lost Creek project, which involves managing a large area of land in Wyoming for uranium mining purposes. Urenergy Inc.'s stock price has increased significantly in the past year due to a combination of company-specific developments and broader uranium market catalysts. Key factors contributing to this growth include strong operational milestones, such as positive Q3 2025 results and advancements at the Shirley Basin project, analyst upgrades and positive sentiment, with Northland Securities initiating coverage with an outperform rating and Maxim Group upgrading the stock to a buy rating. A strengthening uranium market, driven by rising investor interest, supply constraints, and supportive government policies. These factors have created a bullish outlook for uranium prices, positively impacting Urenergy's stock price. The company's 52-week high of $2.35 represents a gain of over 325% from its 52-week low, indicating multiple instances of significant increases in the past year. The primary drivers of revenue growth or decline for a company are multifaceted and influenced by various factors. Key contributors to revenue growth include increased production at Lost Creek, ramp-up of operations at Shirley Basin, timely delivery into contractual obligations, sustained higher pricing in the uranium market, global support for nuclear energy, and results of exploration programs leading to potential new discoveries. On the other hand, specific drivers of decline include decreased disposal fee revenue due to minimal activities and lower interest income, resulting from significant cash spending on development projects. These factors highlight the importance of operational efficiency, strategic planning, and market conditions in determining a company's financial performance. Net income and profit margins decline. A shift in financial performance. The financial performance of the company has taken a downturn, with net income decreasing by $26,190 from -$33,127 in 2024 to -$59,317 in 2025. This decline is accompanied by a significant drop in profit margins. The gross profit margin decreased from 12.3% in 2024 to -11.7% in 2025, while the operating loss increased from -$12,650 to -$19,071. The primary reason for this decline can be attributed to two key factors. Firstly, a warrant liability revaluation loss of $6.666 million is reflected in net income, contributing to the decrease. Secondly, the average loss per pound sold increased from $6.19 to $6.72 in 2025 Q3, indicating a sharp drop in profit margins. These changes suggest that the company's financial performance has deteriorated significantly, with both net income and profit margins experiencing substantial declines. The underlying causes of this decline are multifaceted, but it is clear that the company faces significant challenges in maintaining its financial stability. The company's financial performance indicates a significant issue with its cash flow management. Despite generating revenue, the company is unable to convert this into positive operating cash flow. The data from various sections of the report confirms this trend, with net cash provided by operating activities consistently showing negative figures. Specifically, the 9 months ended September 30, 2025, saw a net outflow of $43.4 million in operating cash flow. This suggests that the company is struggling to generate sufficient cash from its operations to meet its financial obligations, indicating a need for improvement in its cash management strategies. The company's financial situation reveals a significant increase in its debt level, from $36,857 to $40,469. The debt level rose by $3,612 between December 31, 2024 and September 30, 2025. This increase is attributed to financing under a master lease for its fleet of vehicles. Interestingly, interest expenses have also undergone a notable change. In 2024, the company reported a negative interest expense of -$59,317, indicating a gain. However, in 2025, This figure turned positive, with an interest expense of $33,127. Furthermore, quarterly and year-to-date interest expenses for 2025 show a significant increase compared to 2024. The overall trend suggests that the company's debt level has increased, and its interest expenses have also risen significantly. Management is optimistic about the company's outlook, expecting significant revenue growth in 2025. With plans to increase production rates and bring new facilities online by 2026, the company aims to deliver 440,000 pounds of UO at an average price of $61.77 per pound, resulting in revenues of $27.2 million. To fund these initiatives, management will rely on operating cash flow and available cash, with potential additional financing through debt or equity if needed. Concerns about inventory buildup or supply chain disruption are evident in several instances. Inventory levels have increased significantly at the plant, with drummed inventory rising from 17,000 pounds to 41,000 pounds. Purchases of UO for $1 million were made to boost base inventory position, potentially leading to inventory buildup or supply chain disruptions due to higher costs. Additionally, there are concerns about potential inventory buildup or supply chain disruption due to increased sales volumes of non-produced pounds and the use of purchased pounds with higher costs. A third planned shipment was delayed in 2025 Q3 due to external shipping scheduling issues, indicating a possible supply chain disruption. However, not all instances show signs of inventory buildup or supply chain disruptions. In some cases, there is no indication of these concerns. That concludes the financial summary for Ur-Energy Inc. Feel free to comment below, and I will be happy to answer them when possible.